Hey guys, what's up? Alec back with the daily stock market, and look at that. Such a good Green Friday. Coinbase was up 11% once again. Netflix was up 8%. We see Nvidia up 6%, Shopify up 6%, Roblox up 5%, Google up 5%. Tesla up 5%, and the list keeps going. Now, you definitely want to stay throughout this entire video because we have an interesting, spectacular earnings week ahead of us coming up for January 23rd and beyond. Monday, Tuesday, Wednesday, Thursday, Friday, all bangers. Every single one of them. So in this video, we're going to do a detailed dive of what stocks are reporting this week for earnings, and we're going to go over some expectations also. So this is a video you definitely don't want to miss. Subscribe with post notifications on YouTube, smash a thumbs up, share this with a friend, and let's dive right into it. So first up, we have some banking companies reporting on before the open. After the close, we have Logitech and some other ones. Tuesday before the open is where it starts to heat up because we have Verizon reporting, which is a huge telecommunications company, and AT&T, which is reporting on Wednesday. There could be some stuff to look for in that Verizon port if you're a AT&T investor. So keep an eye out on that Verizon report. Johnson & Johnson is another huge company to be watching. Okay, this is a very big earnings week. Moving on to Tuesday after the close, Microsoft, one of the biggest companies in the whole stock market, which is reporting on Tuesday after the close. It's going to be a very scrutinized earnings, so make sure you're tuning in. And Microsoft is really going to be setting off this earnings week too. So if they report a bad earnings, then there could be some bad earnings outlooks for other ones like Google and Facebook and so on. Moving on to Wednesday before the open, we have AT&T, we have NextEra Energy, we have ADP. After the close, we have the stock that everybody wants to know about, Tesla, reporting on Wednesday after the close. And it goes without a doubt saying that the whole world is going to be watching this earnings on Wednesday after the close because everyone wants to see what Tesla is going to report. Are they going to beat earnings? Is the stock going to go up massively? Or are they going to miss hugely and the stock is going to be devastated once again? Okay, so we also have Sands Las Vegas, which owns a lot of the resorts and hotels and casinos in Vegas. Thursday before the open, we have American Airlines and Southwest reporting at the same time. So those will be a good play for us in the close friends list. We're going to be playing calls and puts on all these different companies and making money this week in the close friends list. So message me here on the daily stock market, now 189,000 followers, if you want to follow along with the trades that we're doing this week, what I'm buying, what I'm selling, and everything in between. We have some great success stories, now over 700 positive testimonials. Here you can see that on the highlights section of my Instagram. And once you join the close friends list, you'll get access to the other highlights that you don't currently see. But if you click on success number 7, you can see 400% gains on a Tesla put, over $2,000 made on just one day of trading. So we're going to have some great gains to behold this week. Join if you want. Either way, we're going to be making money on the close friends list, and I'm going to be shutting signups for the close friends list this week. So if you've been meaning to get on for a while now, make sure you message me before I shut those signups this week. Now, the first major individual stock that we have to talk about in this video is going to be Microsoft, reporting Tuesday after the close. They were trading up 3.5% on the day, by the way, on Friday. And in the last year, they're down 20% still. The tech-heavy NASDAQ 100 stocks index enters this crucial stretch amid a darkening backdrop that short-circuited a strong start to the year, underscoring the risk ahead. Microsoft, which kicks off the group's reporting Tuesday, joined Amazon in starting to cut thousands of jobs this week as sales slowed. Okay, Google partner Alphabet followed with plans of its own to shrink its workforce. So people are worried right now after such a strong start to the year. Is the earnings season among us going to plunge us down into the red abyss that we have seen last year in 2022? Wall Street has been slashing earning estimates for months for the tech sector, which is projected to be the biggest drag on the S&P 500 profits in the fourth quarter. Data compiled by Bloomberg Intelligence showed the danger for investors. However, it is analysts still prove too optimistic, which demand for the industry products crumbling as the economy cool. Tech is driven by a lot of overall earnings recessions that we are still seeing in the S&P 500. An equity strategist with Bloomberg Intelligence said, fourth quarter earnings for tech firms in the benchmark are projected to drop 9.2% from the same period a year earlier, the steepest slide since 2016, data compiled by Bloomberg Intelligence showed. The speed of the deterioration in sentiment is notable. 3 months ago, Wall Street merely saw profits coming in flat. Revenue growth for these companies is fading relative to the past couple of years when the pandemic and ensuing lockdowns supercharged sales for everything from digital sales to personal computing and the components that power them. High costs are also squeezing profits. Valuation concerns. The concern, however, is valuations are still far from cheap despite the 33% tumble in the NASDAQ 100. The gauge is priced at about 21 times profits projected over the next 12 months compared with an average of 20.5 the past decade. So, if we take on what's the past decade, 20.5, it's really not that overvalued after the 33% tumbled as this article is making it seem, because the gauge price right now is 21 times profit. Okay, so it's a very smidge above what is average. And further estimate cuts would only make it look more expensive. The multiple bottomed at 17.7 in 2020 and at 11.3 in 2011, the wake of the recession that ended. So you have to be a little bit wary going into earnings, especially if you hold a lot of big tech stocks in your portfolio. Microsoft is expected to report around 2.3 EPS. We can see that's a little bit lower than what's reported last quarter. Now, if we go to Netflix, which just reported earnings, they had great subscriber growth and they ended up around 8.5% up after hours Thursday. Okay, what we can see if we scroll down is we can see that they did miss EPS. Okay, so analysts can definitely be on to something here. We can see the expected was 0.44 and the actual was 12 cents, which is a big miss. However, they did report growths in subscriber growth as well. So if something like Microsoft, a stock like Microsoft, reports a lower than expected EPS, but in the same earning report, we also see them reporting a surge in annual subscriptions or cloud data or subscribers to platforms that they have, then that could be a good, successful earnings from Microsoft. So there's a lot to consider and there's a lot of moving parts with earnings. That's what makes it so risky. And that's why it pays to be in a professional trading group if you are trying to play earnings. Now, the next stock that we have to talk about is Tesla, up 4.9% on Friday. And I know you guys love Tesla stock. If you look at my last 5 videos, pretty much every single video we talk about Tesla stock because of how much demand there is for me to talk about Tesla stock. So if you're new here to the channel and you do love Tesla stock, make sure you hit that subscribe button because we cover Tesla stock a whole bunch here. Here we see them up 6.4% in the past week. And in the past 3 months, they're still down 35%. Remember, they did bottom at $108 per share. And if they come in with a very poor earnings, there's a good chance that they will go down to $115 to $105 per share. Here we can see that there's 3 days left to the Q4 call earnings on 2022 for Tesla. Here we see a bunch of questions have been asked right now. If we look at what some of the most shared questions are, the number one most upvoted ones, we see anonymous retail investor. After recent price cuts, analysts release expectations that Tesla automotive gross margins, excluding leases and regular credits, will drop below 20% and average selling price around $47,000 across all models. Where do you see average selling price and gross margins after the price cuts? Which is a very good question to be asking because Elon Musk has always stated that 20% margins and 20% profits is a very important thing to the Tesla business model. So if we see Mr. Elon Musk answer this question here and he says something like, oh, because of the price cuts and because of the smaller price on the average car, our gross profits are now closer to 15%, that's going to be a very, very bad thing for Tesla stock. And we can very much see Tesla stock tumble, the stock price go down just based off that one question alone. Now, the second question is the solar roof products continue to struggle to gain traction. Where has Tesla learned from this, and what changes do you foresee in the future of solar roof versions to increase scale? Which is a great question. That could be very bullish if Mr. Elon Musk does put out some great information about solar roof, because right now there isn't much about that on Tesla. Next one, please provide a detailed explanation of where you are on the 4680 ramp. What are your current roadblocks? When do you expire T to scale to 10,000 vehicles per week? Is Cybertruck production still on track for next year? Which is a great question, because if he does hint that, it's ahead of schedule, that could be very good for the stock. If he doesn't say anything, or if he says that they are behind schedule, which I doubt he'll say, but if there's hints towards that he's behind schedule on the Cybertruck, that could be a very bearish thing for Tesla stock as well. Now, if you want more updates on Tesla stock, make sure you message me on Instagram to join my private group. I'll be posting all my thoughts every single day on Tesla, what I'm planning to do, how I'm going to play earnings, if I'm going to be doing call options, put options. I'll be posting all the information there on that close friends list. So if you're ready to make some money this week in the stock market and become a success story yourself, make sure you hit me up on Instagram, message me there before I shut down the signups. And the last stock that we'll briefly be talking about is Visa at $224 per share, up 8.9% in the past month and up 20% in the past 3 months. So they've had a lot of positive momentum in the past couple months. We can see they're also up 82% in the past 5 years. As we scroll down, we can see that Visa has continuously beat earnings time and time again the last 4 quarters in a row, shattering earning results. This time, their expectations are higher than ever. They're expected at $2.01 per share, and that's available, by the way, on Thursday, 1-26. Here I found an article with some insider buying and selling. In other news, Insider sold 25,000 shares of Visa stock in a transaction dated December 2nd. The stock was sold at an average price of $216 per share for a total value of $5 million. Following the transaction, the insider now owns 200,000 shares, still valued at $50 million. So that isn't the worst thing in the world. If you want to see some more whale alerts here, go ahead and finish this article. I'm also going to find out a way to go ahead and automate these whale alerts for you guys. So make sure you subscribe with post notifications on. Follow me on Instagram if you guys want those whale alerts and me to figure out a way to automate these whale alerts for you guys. Actually looking into a Discord. So making a Discord for you guys to automate some whale alerts. Other than that, we see institutional trading of Visa. A number of hedge funds have recently made changes in their positions in the company. Vanguard Group boosted its stake in shares by 0.6% during the third quarter. Vanguard Group now owns 145 million shares of the credit card processing stock. So if Vanguard owns that many shares, you know that they believe in the future of this company. So a lot of institutional backing holding Visa. Visa last reported its quarterly earnings dated Tuesday, October 25th. The credit card processing reported $1.93 on EPS for the quarter, beating the consensus by $1.80. Here we see a research analyst by Jefferies Financial Group up their Q1 2023 earnings per share estimate for shares of Visa in a research noted on Wednesday, January 18th. So very recently, they now forecast that the credit card processing company will earn $2.01 per share for the quarter, up from the previous estimate of $2 flat. Okay, they currently have a buy rating and a $260 price target on the stock. The consensus estimate for Visa currently full year earnings is $8.28 per share. We can also see that Visa has been a subject of several other research reports. Wolf Research raised their price targets on Visa from $240 to $255 per share in a report on Thursday. January 5th, stocknews.com raised Visa from a hold rating to a buy rating in a report on Thursday, January 12th. Wells Fargo raised their price targets on Visa from $225 to $250 and gave the company an overweight rating in a report on Friday, December 2nd. And the list goes on and on. So there's a lot of positive activity with Visa right now for long term. So if you're in my private group, I will continue to provide updates every single day on all these different stocks and the most requested stocks, including the stocks that we went over in this video and including the stocks that we didn't go over in this video. So if you want more updates, message me on Instagram. Make sure you follow me on Instagram. Subscribe on YouTube with post notifications on. Thank you guys for all the love and support. Share this video with a friend, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.